Welcome to Explain the Charts, where we break down market data and news to give you a clear picture of the trading landscape. Today is March 14th, 2026, and our focus is squarely on LTCUSD, or Litecoin. Litecoin has been a staple in the crypto world for over a decade, but recently, its price action and the news surrounding it have become increasingly complex. We are currently seeing LTC trade in the mid-$50s range, reflecting a significant cooling off from previous highs. Before we jump into the charts, we need to address the heavy hitters in the news cycle that are influencing sentiment. There is a mix of institutional optimism and existential concern that is keeping the market on its toes. Institutions have been quietly accumulating, yet retail sentiment remains somewhat cautious. Let's start by looking at the macro environment on the daily chart to see where we stand. A major story making headlines recently involves Litecoin's founder, Charlie Lee. Lee has issued a stark warning that Satoshi Nakamoto's original Bitcoin holdings could be the first target of quantum computing attacks. While this is a broad security concern for the entire industry, it highlights Litecoin's role as a faster, adaptable digital silver that often tests scaling technologies first. On the fundamental side, the next Litecoin halving is now approximately 500 days away. The market is already beginning to speculate on whether the reduction in block rewards will act as a supply-side catalyst. Historically, halving events lead to increased volatility and often long-term price appreciation. Another massive development is the launch of the Canary Capital Litecoin ETF, which began trading on Nasdaq late last year. This ETF, under the ticker LTCC, has been viewed as a gateway for legitimate institutional capital to flow into the asset. Coinbase has also expanded its lending services, now allowing users to use LTC as collateral for large USDC loans. Despite these bullish institutional steps, the price has struggled to maintain its momentum in the short term. If we narrow our focus on the daily chart to October 2025, we see a dramatic event that defined current market structure. On October 10th, Litecoin experienced a massive flash crash, with the price plummeting from $125 down to $54 in a single day. This move wiped out billions in market cap and was driven by a broader market panic and ETF regulatory delays. Notice how the price close was significantly higher than the low, suggesting a massive buy-the-dip reaction from whales. Since that crash, the $54 to $55 level has acted as a pivot point for the market. We can see a long period of consolidation following this volatility as the market sought to find a new equilibrium. The recovery attempts were met with resistance near the $100 mark throughout the end of 2025. Every time LTC approached triple digits, it was rejected, indicating strong sell pressure from legacy holders. This creates a clear overhead resistance zone that we must eventually break to turn macro bullish. Now, let's look at the current consolidation range more closely. Moving into early 2026, the daily chart shows a sustained period of range-bound trading. The price found a bottom near $45 in early February before rebounding back into the 50s. This $45 to $50 zone has now established itself as a critical support floor. As long as we stay above this floor, the long-term structure remains intact despite the bearish trend from the 2024 highs. We are seeing the volume beginning to dry up, which often precedes a significant breakout move. The daily candles over the last 2 weeks of March show very small bodies, indicating a state of indecision among traders. This sideways movement is likely the result of the absence of specific network upgrades or news catalysts. However, the presence of the LTCC ETF means that any sudden inflow of capital can move the price rapidly due to lower liquidity in this range. Technical analysts are watching for a move above $57 to confirm a short-term bullish reversal. Let's drop down to the 1-hour chart to see the intraday mechanics of this range. On the 1-hour chart, the price action becomes a playground for scalpers and day traders. We can see clear rejections at the $56 level, which has served as a local ceiling over the past few days. Conversely, every time the price dips toward $51, buyers step in aggressively. This $5 range is where most of the current volume is being transacted. The 1-hour candles show frequent wicks to both the upside and downside, suggesting a lot of noise and stop hunting. Traders should be cautious of false breakouts in this environment. A sustained close above 56.50 on the hourly would be a strong signal that bulls are taking control. Until then, the path of least resistance appears to be continued sideways churn. We can correlate this to the broader crypto market's recent cooling, where Bitcoin and Ethereum are also consolidating. LTC's historical tendency is to laggardly follow Bitcoin's moves, but with more explosive percentage changes. Switching over to the 15-minute chart, we can see the microtrends that help identify entry points. For the last 24 hours, Litecoin has been hugging the VWP, or volume-weighted average price, very closely. There was a brief spike toward 56.73 on March 13th, but it was quickly sold off, creating a trap for late buyers. This 15-minute timeframe highlights the importance of the 54.50 level as a mid-range support. If we lose 54.50, we are likely headed back to the bottom of the hourly channel near $51. If we can flip 55.50 into support, the next target for a scalp would be the recent high near 56.80. Watch the transaction counts on these 15-minute bars. An increase in transactions without a price move often indicates whale absorption. The tight Bollinger Band contraction we see here suggests that a volatility expansion is coming soon. To recap the key price levels, your primary support is at $45, which is a must-hold for the macro bulls. Intermediate support sits at $50 and $51, while resistance is clustered at $57, $63, and the major psychological level of $100. In my unbiased prediction, I see a 60% likelihood of a slow, grinding recovery towards $70 over the next 2 months. This prediction relies on sustained ETF inflows and the broader market not experiencing a major geopolitical shock. A bearish scenario would involve a break below $45, which would likely lead to a test of multi-year lows near $30. Keep a close eye on the hash rate and minor accumulation patterns, as these often led price movements in POW coins like Litecoin. Also, watch for any updates from the SEC regarding other altcoin ETFs, as a rising tide sentiment often lifts LTC. Charlie Lee's comments on security will continue to be a talking point, but the fundamental utility of LTC for payments remains strong. Thank you for watching this deep dive on Explain the Charts. Please remember that this analysis is for educational purposes only and does not constitute financial advice. Always perform your own thorough research and manage your risk before making any investment decisions in the volatile crypto market. Hit the subscribe button to stay updated on all major chart movements.